Hey everyone, it's Hamish from the Young Investors Podcast. Myself and Brandon are excited to bring you your weekly rundown of the latest business and investing news from around the world. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing, make sure you reach out to a qualified financial advisor. But with that said, let's get into another episode of the Young Investors Podcast.
All right, everybody, welcome back to yet another episode. Welcome back, everybody, to yet another episode of the Young Investors Podcast. I'm joined, as always, by Hamish Hodder. Oh, hello. I just lost my AirPods. Hamish, what's cracking, my friend?
What's cracking? It's another afternoon podcast, a Tuesday afternoon podcast. It's one of those sleepy episodes, guys, because we're pre-recording a little bit so that we can have a bit of time off over the weekend and enjoy the Grand Prix in Melbourne, which would be really exciting. Because I'm a pretty casual F1 viewer. I definitely don't watch every race. I'm not keeping up to date with all the news and everything, but I really enjoy it. And a lot of that's come from the Drive to Survive series on Netflix, to be honest. Yeah. But I've never been before either. So I'm excited. You looking forward to it?
Yeah, I'm looking forward to it. Yeah, I totally kind of just forgot about the fact that the Grand Prix and the podcast clash. Well, they don't. The Grand Prix is on Sunday. We record on Thursday. But I'm going down for the 4-day weekend. So yeah, forgot about that, but that's okay. We're going to do a Q&A episode, but yeah, I am very much looking forward. So myself and Hamish, we're going together this weekend, so that'll be really cool. We get to hold hands and everything.
Yeah.
Sit on each other's laps. No, you've got your own seat and I've got my own seat. Thank goodness. So that'll be really cool. I only went for the first time last year. I'd never been to a Grand Prix before, but it's really cool. It's so much fun. It's like an event. There's just so many people there. The atmosphere is just insane. It's just, there's something about, I don't know, this, I can kind of understand why people used to watch like the gladiators and stuff. There's just something about a dangerous sport and a lot of speed and like a lot of sound, a lot of money. It's just an interesting spectacle. And they're like going around these corners and banging wheels and you're like, yeah, I don't know. There's just something about it.
No, you're right. There is something about watching people do something that's dangerous or has a lot of adrenaline involved or something at least that you definitely couldn't do. And they do it so well. There's something exciting. I guess that's the idea about I guess that's related to a lot of sports anyway.
High level.
Just being able to watch people perform at an elite level. But with racing, the stakes are very, very high. But yeah, I wasn't even aware that there was so much that goes on during the Grand Prix, which makes sense. It's not just the Formula 1, 2, 3. They have they use it as like a whole kind of race event weekend with a bunch of stuff. So yeah, I'm excited.
Massive, so much stuff. There's DJs, there's performances, there's, different, there's the Porsche. You can go look at all the Porsche things, all the different car makers will have some sort of display or something. Yeah, there's a lot to do. There's a lot to do. Should be good. So if you're going to the Grand Prix and you see us, come and say hello. Definitely.
Yeah. And if you can get us onto the grid at the start of the race, that would be lovely.
Yes.
Just, reach out to us.
Wink, wink, nudge, nudge. If you have connections,
there's got to be someone out there. There's got to be one person.
Maybe one person. Yeah, true. I don't know, maybe. If you have connections, we would love to be connected. Imagine that. Imagine someone reaches out and we end up like getting upgraded and doing some like pit straight walk or something like that. It'd be pretty cool.
That would be pretty
cool.
Those
tickets cost, some of the tickets though, they cost thousands of dollars. Thousands, like 5-10 grand packages. Like, oh my gosh. Imagine just blowing 10 grand on a weekend. Whew.
Yeah, crazy.
Ay. Yeah. Oh, we should try and get a paddock pass. That'd be cool because then you actually get to go in where the drivers just like walk between their motorhomes and stuff like that. That would be pretty epic.
We can
you get us into the paddock pass, we'll be your friend forever. Okay. No, we better actually get onto some podcasting now. So yes, we're going to do some Q&A stuff today.
Yeah.
Because we are recording on what day is it today, Hamish? It's Tuesday. Yes, it's Tuesday. So thanks very much for submitting your questions, everybody. We've compiled them all into our Google Doc, and we're just going to start at the top and work our way down. But before that, Hamish, we mustn't forget.
Today's episode is sponsored by Sharesight. I forgot for a second there.
I'm glad you got that. I was like, oh my God, am I going to have to prompt him here? I'm glad that clicked with your brain.
Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your broker, or you can enter your trades in one by one or using Excel. And once you do that, it will track all the gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, which are often on ETFs or individual stocks, then it will do those calculations for you, which is a lifesaver. Currency gains, if you're buying shares internationally or you hold foreign currencies, it's kind of like a hidden gain or loss that most people are not tracking, and it's super important, especially in the environment we're in right now with currencies kind of fluctuating quite significantly. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used at tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That site spelled SIGHT, sharesight.com/young investors. So use that link. You can sign up to a free plan and track up to 10 holdings, so stocks, bonds, ETFs, that kind of thing, for as long as you want. So if you haven't gone and check it out, go check it out. But also, if you want to sign up to a premium plan for more features, more reporting, then you can currently get 4 months off an annual subscription if you use our link. So go check it out if you haven't already. And as always, thank you to those who have signed up using our link and are supporting the podcast.
Absolutely. All right, Hamish, where do we start? I am going to start us right at the top here.
Okay.
This was a question that was actually left a week or two ago, but I'll ask it to you now. Recently discovered this channel and absolutely loving the content. Well, thank you very much. If there was one piece of literature that you could recommend to new investors, what would it be?
Yeah, I think
what you got, Hamish?
There's a lot of the thing about investing is there's a lot of good content out there. From big fund managers from the past or current, whether they've written books or even their shareholder letters. There's a lot of good information out there where you can learn about investing. But if you're twisting my arm and forcing me to pick one, I'd have to say just going through and reading the Berkshire Hathaway annual letters. So whether you do that by just kind of chronologically, just going through and reading them, or whether you pick up a copy of a book such as The Essays of Warren Buffett, which is a guy who's kind of taken some of the most important pieces out of the letters and put them into categories. So if you don't want to just read through the letters chronologically, you can read through it as in, what is everything Buffett has said on management? What is everything Buffett has said on, margin of safety or whatever? But regardless of how you go through those letters, I think that's probably where I've grabbed the most investing wisdom. And it is kind of all kind of sprinkled out through different letters. So it does take, if you just read one letter, you might think, oh, there's not that much, meat on the bone here. But once you go through a lot of them, you start to kind of piece together the different elements that are important, and also different things that are important at different times. As you can kind of see over Buffett's multi-decade career, the different things that have been important, whether it's interest rates, inflation, or whatever the topic is, given that particular period. So that would be certainly number one for me.
I'd probably say the same, but I will say something different. That what I'm going to say is not going to surprise anybody that's been following me for a while. It's the same book that got me into all this, and it's Rule 1 by Phil Town. I know I've said that a million times, but the reason that I recommend this, it's, how do I say it? I don't think it's perfect, Rule 1. I don't think it's perfect, but what it does is if you're completely new to investing, it gets you in the right mind frame for investing. It teaches you the 4 key pillars of value investing, the Warren Buffett style value investing approach. It teaches you to understand the business, or what he calls meaning. It teaches you to make sure that the company has a moat and how to find the moat, how you can check whether a company has a moat statistically, like quantitatively. It teaches you about management, what you need to look for in terms of management, how management can screw over a company and how to avoid that. And then it goes through it goes through a discounted cash flow analysis-ish. It's not quite, but it follows the same. It gets you in the right mindset. It follows the same sort of principles of starting with kind of what the company's earning, where are they going to be out into the future in 10 years from now, and then from once you've estimated that point, calculating back to figure out what you'd pay for the business today, what you calculate for a fair or a 50% margin of safety kind of stock price. So that's the other thing. It introduces you to the concept of margin of safety, which is incredibly important for an investor. But no, I like Buffett's annual letters. If you just take the time and go through chronologically, you'll learn a lot. But yeah, you're right. If you get one of those kind of summary books, Essays of Warren Buffett or something like that, that'll help you out tremendously as well. Yeah.
Do you remember what were the first kind of personal finance or investing books you read? Because I remember, I think the very first one I read is probably the one that a lot of people read first, which was Rich Dad, Poor Dad. Which is just kind of a short book that kind of, it's very much just mindset, very basic, but it is, I think if you've never thought too much about investing, it's quite good for just understanding why you would invest and what we're actually doing, especially in relation to kind of cash flowing assets. I think he's talking about property in the book, but the same thing applies for businesses. But I remember that was the first, and then I think I did something crazy, which was I didn't do it on purpose, but I stumbled into The Intelligent Investor, which is a great investing book, but probably not the greatest book to read first before reading Rule 1 or something else. Those were distinctly the two that I remember being first. I don't know if you, what were yours?
Definitely, what's it called? Rich Dad, Poor Dad. Yeah. That was the first one. And you're right, it's just a total mindset book, but it really gets you, like, it's kind of sad that the whole book was kind of like made up and fake, and Robert Kiyosaki's kind of, his reputation's gone down the drain a little bit.
That's true.
But I mean, I don't mind, you know, even though it's fake, it gets you, the stuff he's talking about makes sense. It gets your head space right for investing, for building and accumulating wealth and pushing yourself towards financial freedom. So it's definitely still a very, very good and helpful book. But apart from that, I read The Barefoot Investor as well, which is an Australian one by a guy called Scott Pape. It's just unbelievably common, and
it's a classic, Australian classic.
It's so common. I think it's like 1 in 3 Australian households have a copy now. It's insane. It's insane. But yeah, I think we'll give an honourable mention as well to One Up on Wall Street by Peter Lynch. Yes. God, that's a good book. I love that book.
He's great too.
It's a little bit, I mean, it's still value investing, and he tells you how kind of the small investors have an advantage in the market and what you should be doing as an individual, not a fund manager. You're an individual. You're just managing your own money. There's no time pressure on you. You can just sit back, look, and use your own money. He definitely talks about the advantages of doing that and how to exploit those. He's still very value-minded, so he talks about knowing what you own instead of like understanding the business. They're the same concepts, but one's kind of Warren Buffett, one's Peter Lynch. But so that he's in that same realm. It's not exactly as precise as like Phil Towns, do this, then do that, then do that, then do that. I kind of appreciate that approach from Phil Towns, just having it really structured. But no, One Up on Wall Street is definitely another absolute banger.
Yeah. I mean, especially
honorable mention
in the investment world, but even in the value investing world, there's no precise science. There's not the value investing formula, so to speak. It's kind of there's the general kind of fundamental idea of what we're trying to do. But once you start to read different books from different investors, you see, they do that a little bit differently. They have a bit more emphasis on management. They have a bit more emphasis on the high quality business versus the cheapness. And all of that is value investing. It's just different kind of applications of the fundamental principles. So that's something to keep in mind, is all of these guys, you'll notice that there are different, they go about it slightly different ways, although they're all trying to do the same thing, which is ultimately buy a business for far less than what it's worth and be confident when you're doing so that you're not speculating.
I'd describe value investing as maybe like it's a set of principles, and everybody applies those principles in a slightly different way, but we're all doing the same thing at the end of the day.
Yeah, for sure. All right, we'll just we'll keep going down the list. When are you two going to start the Young Investors Investment Fund?
Whoa.
I would dollar cost into you guys in a heartbeat.
Let's go. Get around it. Well, we have actually today an announcement, and that is no. Imagine if. Oh man, I can't see myself.
No.
Personally, I'm not going to be a fund manager. I'm never going to be. I've spoken to Tom about this in the past. He'd be quite interested in being a fund manager one day.
Yeah.
He seems to like that vibe. Personally, don't want to manage other people's money. Don't like the stress. Don't like the pressure of that. I mean, I already have imposter syndrome with my YouTube channel. Imagine the imposter syndrome I'd have if I had investors and I was managing people's money. It's just not my vibe.
No.
I'd rather just manage my own money. Then the worst that I can do is screw over myself. And if that happens, then that's fine. I can take that. But screwing over other people and losing their money, I don't like it. I don't think I could do that.
Yeah, I could maybe see it. I could maybe see it at some ways down the road. It's definitely not something I've thought really deeply about recently. And a big part of that, I think, is probably similar to what you just said, which is that, I mean, imposter syndrome, but I just don't have a lot of experience. I think it would be kind of crazy for someone with only a few years in experience to just, pivot into that. I think it's something that you kind of, I like Monish's view on it, which is that you need to first, if you want to be a fund manager, what you should do first is, invest for yourself for a very long time to get yourself to the position where you can live. You've basically built yourself enough wealth to live off it, to prove you've got the track record. And then if you want to go into it. Right. So yeah, it's not something I've thought all that deeply about. I like making videos on the internet. It's a lot less stressful.
Yeah. No, true that. Although, 2% management fee, regardless. That's a cushy life.
Right. How many listeners do we have on the Young Investors again? 2%.
Yeah, we've 2%.
So 10 grand off each
net
of them.
Yeah. Actually. No, definitely not. I couldn't handle it. I really couldn't. Couldn't handle it. I couldn't handle it when I used to talk about individual companies. I didn't used to recommend anything, but even despite not recommending the stocks, people would still buy them because I spoke about them. Then they come back and, obviously I speak about businesses, some go up, some don't go up. And then, hey, I invested in this company because of you, even though I said don't do that. Yeah. And they're like, and I've lost money. So that didn't sit with me right. How am I going to actually properly manage other people's money?
Yeah. Or you could be Cathie Wood and make $300 million while earning a negative return. So clearly the investment...
Is that real?
That's really what...
Is that legit?
Yeah.
Wow.
She made $300 million in fees and had negative returns since opening ARC. So clearly the investment management business is a meritocracy. So well done to Cathie Wood. Imagine making $300 million and you lost people money. Like that's just mind blowing to me. Obviously, you could argue, well, it's just a short period of time and maybe over the long term she'll win. But it's crazy that she can basically suck money, or not just her, but this is a big problem with the industry, is to just suck money from people and then not give them results. It's just mind blowing.
If people want to lose their money, if they want to lose their money, I can do it for like half the price. Like, come on,
I'll do it for 150 million.
Hit me up. If you want to just shoof it away, then let me know. I can get rid of it for you.
Yeah, exactly. Jeez. Oh man, no. So no Young Investors Investment Fund. I don't think.
But thank you for the vote of confidence. We appreciate that.
Yeah.
How did you find your passion in the investment world? Do you have some? Do some of your parents work in finance?
Yeah, I think I kind of stumbled into it. I didn't really know what I wanted to do after high school, and I just kind of stumbled into commerce, just a basic university degree. And I, again, said, I like maths, so what are my options? Like, okay, finance is pretty, mathsy in commerce, and I really enjoyed it. And it was really just from that it was really just university. I just kind of stumbled into it. Neither of my parents are in finance at all. My mum's a teacher and my dad is a project manager. So no, I didn't. Yeah, I definitely kind of just stumbled into it myself. I think one thing that they kind of taught me well, which really helped me regardless of what I ended up doing, which was to be kind of an independent thinker and to be curious. And I think that's really important. If you get that right, to just want to do your own thing, not care about what everyone else is doing or what other people think, I think that's like, regardless of whether it's investing or something else you want to go into, that's kind of the most important thing. So yeah.
Nice. How did I find my passion? I was studying physiotherapy. In fact, I just finished studying physio. I kind of realized I never really wanted to own my own clinic, and that's where the big bucks are. So I was like, geez, I'm not really actually going to make all that much money just chipping away being a physio. So I was like, there's got to be a way to turn dollars into dollars. And then I kind of started looking into stock market investing. Just happened to read, I can't remember the name again.
Rich Dad,
Poor Dad. That's right. Thank you, Hamish. My gosh, my brain's asleep today. Yeah, I read that on the recommendation of someone at the gym, and then from there I was just like, wow, this is really interesting. Although it's quite interesting, I've always had a passion for kind of like businessy type ventures. It's funny, like looking back on my childhood, like I remember when I was in primary school, I drew a picture of a robot, and then I tried to go around to all of the parents of my friends and ask like for money so I could build my robot. Like I was like in year 4 or something like that, and my robot was literally like metal bar, motor, metal, like all the joints were motors and all the long bones were just like metal rods. And I was like, sure, if I just do this, and then I'll be C-3PO. I'll have C-3PO.
And it's been pitching for VC funding since a little
actually,
child.
Actually, though, it's pretty hilarious though. And like there's signs there as well. My favorite video games were always economy-based video games. So there are definitely signs that I was trending in that direction, but I never really... I didn't realize it myself until that time when I was probably like 20, 21, somewhere around there.
Yeah.
When I started to figure it out. And then from there, I got really interested in the business of YouTube. I loved YouTube, got really interested in stock market investing, combined the two, and here we are.
Yeah, YouTube is interesting because you kind of need to...
Yes.
It's like a very interesting crossroad between a passion that you have, but you have to also be very interested in the YouTube side of things, like the video content creation and film.
Yeah.
So it is interesting. It's not just, people who have a passion for something. It's kind of like I don't know, like amateur filmmakers mixed with a different passion or the same passion. It is very interesting.
Yeah.
And it immediately clicked. It was definitely something that for me as well, it was just like, oh, this is great.
And I like doing the investing stuff because it's a little bit of art and a little bit of science kind of thing. Like you get the art with the creativity and the video production, you get the science with the analysis and that kind of stuff, which I think is really cool.
Yeah, for sure.
All right.
Where should we go from here? Shall I?
Also, my parents, my mum's a teacher and my dad is an archaeologist. So no, neither of my parents are in finance.
Archaeologist, that's interesting. Does he?
Yeah, well, he used to work for defense, and he just had a career change. Like he went to uni maybe, I want to say like maybe 8-9 years ago, something like that.
Yeah, okay.
And just studied archaeology and got a degree as a mature age student. Wow. And now he just works as an archaeologist. Yeah,
that's crazy.
And now he's going back to defense, but he's working as an archaeologist for defense.
Wow, so there you go. Very exciting.
Yeah,
that's it. I feel like that's what like I feel like I'll change careers a lot throughout my life. I don't know. I get like I don't know. I like doing new things. So I feel like I'd definitely be the kind of person who has no issue just like going into a brand new business, later in life or whatever. But,
and just off the cuff, I can't remember the exact stats, but I remember seeing something once. So take this with a grain of salt. It used to be the case like a couple of decades ago that it was only predicted that people would have 1 or 2 career paths or 1 or 2 jobs in their entire lifetime. And now these days it's like 5 or 6.
Yeah, I think I saw something similar to that. Yeah.
Yeah, it's pretty crazy. All right, where are we at?
Yeah, I'll ask this one to you. Can you give us a few examples of companies you've dug deep into and concluded that it's not the right investment for you? Could you explain why you didn't for each besides price? Do you have anything on that, or do you want me to pull an example while you're thinking of something?
I'm just trying to think. I never get particularly deep into a company before like for me, it's pretty obvious when I just start looking at, like, I remember back when I was a bit younger, I started looking into some bank stocks because I remember at the time everyone was like, oh, you live in Australia, oh, you'd be loading up on those big four bank stocks, won't you?
Yeah.
And I was like, oh, well, like what's the shtick with these bank stocks and all these dividends and everything? And then I just started looking into like Commonwealth Bank and NAB and that sort of thing, and I was just like, man, there's so much jargon, I just don't get this at all.
Yeah.
And I was like, at that stage I was trying to force myself to really get into banks. I was like forcing myself to really try and understand. I was like, man, I've read this so many times and I still don't really understand it. So that was an example, but I never went particularly deep. Like I'm pretty good at recognizing early on whether I'm just not going to, because I need to be interested. I really need to be interested to go deep on a company and for it to be in the right ballpark. I don't think I've actually. Yeah, most of the ones I've gone deep into in the past, I've actually concluded that I'm pretty happy with this. like Facebook or Meta now, but Facebook back in the day, Google, went deep in on Alibaba and Tesla as well, way back. And all those times I pretty much thought that I was onto something, but yeah.
Yeah, that tends to be the case.
What's one that you've gone into? You go.
All I was going to say is that you're right. That tends to be the case, that you tend to only go really deep, when it's something that you're really interested in, and a lot of the time that does kind of turn into wanting to invest in the company. I think one for me, probably similar to you. I couldn't think of a lot of names, but recently, probably Google was one of them, which it's definitely not a no for me. It's definitely not completely no, but I started looking into them a little bit more in the last 12 months. And where I'm stuck is on, so to answer your question, is understanding their cloud business. It's something that I think is probably quite a large part of their valuation. So I couldn't quite get to investing in the company purely on the advertising machine. I had to come up with some value for the cloud business, and it's a industry that I hadn't looked into before, so it was a lot more complex, and I'm just not quite there yet. And that's kind of been my mode of operation. Is I'm in no rush to invest in a company I don't understand. I will happily learn a little bit here and there about a business or even a segment of a business over 12 to 24 months before I even get anywhere near investing in it. I have no issue doing that. So that's one example, but it's not as if I've said no to close the door on Google. It's just I'm not there yet.
There's actually one technically I did hold shares in this company for a short period of time, but not very long. One that I did go quite deep on, but I ended up not really holding as a long-term investment, was Disney.
Oh.
That was one that I did. That's probably the one I went deepest on. Again, back then they were very much like, I don't really understand how like cable TV and all that sort of stuff works over in the States. And how the different distribution channels work and what's Disney's relationship with all of them. That became quite. And once you start reading into Disney, when you get into the fine stuff, like, yes, you can argue they're very small parts of their business. Like they have a tutoring program, like over in, I don't know, like China or something that they run. Yeah. And it's just like, there's like when you actually figure out all the things that Disney does, it's like dunk, 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 like Disney cruises, theme parks, shows, movies, merchandising, video games, licensing. Here we go, roundabout, this, that, the other.
Yeah,
like it just gets a bit much, and I couldn't really completely understand where each part of the business was going. Yeah. So, yeah.
Yeah, Disney's definitely because I looked into Disney quite deeply as well a couple of years ago, and it's just a monster. It's too much work.
It's an entertainment conglomerate.
Yeah, for sure.
Yeah, definitely. All right. So, here we go. How do you separate a good business from a bad business, not just quantitatively, but also qualitatively? What are some qualitative things where you're like,
I think that's a good question. I think a lot of what makes certainly there's some key numbers you want to look for. Return on invested capital is a big one for separating good businesses from bad businesses. But I think a lot of it is qualitative. I think it's, in my view at least, a lot of investing is kind of pattern recognition in a way. It's kind of looking for key characteristics that businesses in the past that have done very well over multiple decades, where are those characteristics popping up again? Which other businesses are doing a similarly good thing? And, that can take its form in a number of different ways, different kind of economic moats, as Warren Buffett would call them. So essentially different business models or some kind of advantage given the industry, so the specific type of industry. And then there's, qualitative characteristics around management and the people running the business. So yeah, those are, the two kind of key building blocks is competitive advantages and management in my view. And there's obviously, a lot of depth to specific characteristics to those things, but those are two of the areas I'm focused on.
Yeah, I definitely agree with you on this one. Qualitatively, the first thing that pops into my mind is building the picture of what the moat looks like or if there isn't a moat. Like, for example, objectively in I think it was the 70s or the 80s, Pepsi ran this massive campaign, and they figured out that when they did the blind taste test, more people chose Pepsi.
Really? I haven't heard this story actually. So
no, it's called the Pepsi Challenge. Yeah. And that's a bit worrying for a Coke shareholder, thinking you've just got this dominant number one, fizzy drink of the world, yet all of a sudden Pepsi comes out and says, we can objectively prove that more people choose Pepsi than Coke in a blind taste test.
Yeah.
Oh, geez. But, qualitatively, hang on a second. Sure, okay, maybe when you take the labels off, people choose Pepsi more than Coke. But you don't buy a drink with no labels on it. Yeah. You buy a drink with the labels on and plastered all over the shopping center and all over the sports stadium and everywhere. And then you start to think, hang on, it's not for Coke. And that's the thing, they're the thing. It's like Coke, it's a secret. Nobody knows our recipe. It's locked up. It's a secret sauce. Nobody knows how we make Coke. Yeah, in reality, actually, Coke, a cola drink, is very, very easy to replicate. Yeah. It's extremely easy to replicate. The thing that sells Coke is the label, is the brand. It's the brand Coke. And so that's what I've just said is all qualitative. Yes. Like that's qualitative. So you're thinking like, hang on, no, there is a moat here. It's a brand moat. It's a very obvious brand moat. But then you can go into the more quantitative factors and say, oh, look, Coke's grown their drink sales every year since the rest of like the start of time. Yeah. They're advertising here, there, and everywhere. There's a feeling around Coke. They advertise in happy places, at happy events, at places where people are enjoying themselves. There is a brand behind it, and that's qualitative. But yeah, what you're saying as well, like a lot of management stuff is qualitative, just understanding the traits and characteristics of your CEO, that kind of thing, from what they say and how they act. That's very qualitative. But then, of course, you're right, it's backed up by the quantitative, like the return on invested capital, the management of debt, blah, 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 blah.
Yeah, for sure. It's kind of scary that branding of that extent can have that much of an effect on how you actually perceive to like a drink. It's kind of mind-blowing that's how that works, but that's the world we live in.
Well, you think like I don't know, take like a Louis Vuitton handbag. You reckon the handbag is made any differently to another leather handbag that you buy at Myer?
Yeah, you're probably right. Yeah.
It's made in probably in the same factory in China, probably in the leather handbag factory. The only thing that's different is bang, they put the Louis Vuitton logo on it, and people resonate with the design, the advertising, the brand of Louis Vuitton, the lifestyle that it's associated with. You can say that for any Tommy Hilfiger, Balenciaga, take your pick, all of them.
Yeah, I think Payless Shoes did a campaign just recently where they they did an ad campaign where they changed one of their Payless Shoes, by the way, is like a discount shoe store, and they kind of transformed the store and made it all look
in case you didn't get that.
Yeah. And tight, it's Tuesday afternoon, and they transformed it into kind of a luxury looking store, and they were able to sell the same shoes for a very high price, and it was kind of their ad campaign saying that it's their shoe quality is it's just as good. It's just we don't use the fancy marketing and everything, and then we can charge less. But yeah, it's interesting. It was a good example, even though it was their ad campaign. It was actually a really good example of exactly what you just described. After I saw that campaign, all I thought was, well, after Payless Shoes did that, wouldn't they just be better off making it fancy then?
Yeah, I reckon.
Why did they go back? Why did they just make it fancy?
We've proven that we can make more money by tricking you guys. Yeah. But actually, hang on a minute. We can make more money by...
How did they get through the board meeting?
Yeah. But we're great and we choose not to.
Yeah. Oh, dear.
Anyway. Yeah, very funny.
All right, I'll ask you.
Where should we go?
I'll ask you this one. This is back on YouTube discussion. Why did each of you decide to start a YouTube channel, and how did you pick your niche?
Yeah, well, I feel like we've said this quite a few times, but happy to go over it again. I started my YouTube channel at the end of doing my physio degree. I started investing, made a whole lot of mistakes. I have an uncle that works in superannuation, so I called him up because I knew absolutely nothing. And he was talking like, hey, buy a listed investment company, buy a ETF, smart stuff. And I was like, oh yeah, thanks uncle, thanks very much. And then what I went out and bought a whole bunch of individual companies based off some YouTube video I watched, and then they all crashed. And I was like, oh crap, this is not the way to do it. And then I just started making YouTube videos about the mistakes I had made. So I think like my first couple of videos are about, hey, ETFs and listed investment companies are actually pretty good, guys. Like maybe you should consider them. And then people just started watching. I didn't expect, you never expect, you hope that people start watching, but you never expect it. You really can't as someone that's just starting out. But sure enough, I think both of us started out. Nobody was really doing it in Australia, finance content in Australia. So we were kind of the first people, and I've just really enjoyed it since. I really like, that it provides value to people. I like that people tune in and that they enjoy it. And that just drives me to keep making more content. Made a big switch at the start of last year where I was like, we got to make our videos better and better. So I built out my team and kind of made that investment. And now I'm just really having a good time making YouTube content. I don't know. It's just great. It does get stressful actually. Very stressful, especially when you've got salaries to pay. It does get a bit stressful sometimes with the variability of YouTube. But overall, love it. Best job in the world. I mean, I'm sure for both of us this is true. It's definitely gotten way more serious, especially the last couple of years. But I would definitely say that I'm still having as much fun, I think, as when I began. It's like a different kind of fun. Good. Like at the beginning, it's kind of like the novelty of sharing things online, and you get a couple of comments and like you reply to every comment. It's like a different kind of fun. That's that kind of novelty I think is not the same, but now it's exciting to be actually building something and actually putting out content that I can look back and be like, wow, I actually really am kind of proud of that video that I've put out. Whereas at the beginning, it was kind of just a lot of unearned confidence putting whatever up on the internet. So yeah, but in terms of how did I pick my niche? I mean, it was just, I really just wanted I was just using YouTube as an outlet to talk about something I was passionate about. So it wasn't like, I didn't look and go, okay, which niche makes the most money? Oh, it's finance. It just happened to be that way. And I just happened to be interested in finance. So if you're thinking of starting a channel, definitely just do what you're most passionate about, because if you don't, there's no way you'll stick it out. I mean, I'm super passionate about finance, and it's still challenging for me, at least, like, week after week to stay consistent. I can't imagine what it would be like if I didn't like what I was talking about. I think that's really important. Yeah, for sure. It is good fun. And we also, there's so many opportunities that come with it as well, which I'm really thankful for, that I really like getting to meet people, getting to talk to people. Like, I really do get imposter syndrome with YouTube. I really do. I really don't feel like I should be, like, even looking between us, like, how do I have 700 and whatever 100,000 subscribers, and you have like 100,000. I mean,
because your
it should be the other way around.
No, it shouldn't.
No, they're of high production quality, but I mean, you know a hell of a lot more about the stock market than I do, Hamish.
I don't think so.
So I definitely get imposter syndrome, but that also like just blows my mind when, you know, I reach out to Guy Spear and he's like, yeah, sure, let's have a chat. I'm like,
yeah.
Wait, really? Are you sure? Like, you know that I'm just a dude, right?
Yeah. Is this where everyone jumps out and says prank?
Yeah. Is this where I row my boat to the edge of the set and knock on the and it's the Truman Show?
And it was all a dream.
Yeah, exactly right. But
yeah,
but even just like being able to go to the Berkshire meeting last year, getting able to meet, you know, people like Matt Peterson and go to, you know, Guy Spears' lunch and that kind of thing. There's just so many opportunities, and it's cool to know that as we keep growing, those opportunities, you know, grow as well. And I mean, ultimately, that's really good for you guys because it means we can, you know, talk to more people and bring more people on the channel. We'll have to get to Buffett. We'll get to him eventually.
Yeah, we're working our way up. I mean, it's just crazy. I mean, last year Berkshire was particularly, I think, was another level of just it was just something crazy that we were able to do. It's just mind blowing. Yeah, you're right. Like a couple of years earlier, would have just laughed at the idea that we would be be there. You know, being able to kind of be in the position to fund our own trip, kind of thing, to go. But then meeting the people and networking with the people we did, whether it's people, you know, we look up to or people who watch us, and just seeing people, you know, we're in a Starbucks and someone's behind us. Like, it's just, it is kind of. It's been very surreal. And then those moments are really surreal. It's just like, whoa.
It is. Like, it is very surreal. We really I don't feel at all like a famous person.
No.
I'm just a dude going to Subway and eating a sub. You know, I'm just a regular guy on the street kind of thing. Yeah. But when we went, that's why it was very odd experience when we went to Omaha last year, and we would walk maybe 20 meters before someone would come up and have a chat to us, which is great. I love talking to you guys, but at the same time, it was just very strange. I guess, like, of all the places, that's probably where we're going to get kind of recognized or have people come up to us the most. But it just blew my mind. I was like, wait, what? These people actually want to talk to me? That's so bizarre. And talking to you and talking to Tom, we were just getting people like left, right, and center wanting to have a chat, which is great. But that was the first time I was just like, this is really weird.
Yeah, well,
you know?
I think it was especially weird because I didn't expect it. I think I knew inside the convention center there was going to be some people that would see us because it was the three of us. So, like, you know, it's quite a large audience across Australia, New Zealand, the US. Like, there was, you know, globally, and a lot of ours is in the US. But the extent of it really took me by surprise, and I think that's why it was so
quite
shocking, because we were just like out on the street, and it was we weren't even near
on the street
near the convention.
Yeah, like
center.
you said, going to the Starbucks. Yeah,
it was. That was crazy, but it was great to meet everyone. So
it was fun.
Yeah, it was a lot of fun. Yeah.
All right, where do we go? Oh, talking about going to America. Could you get Matt Peterson on for a whole video on DJ Code? Geez, that'd be cool. Well, Matt Peterson, I imagine, will be there in Omaha this year, and we're going to try and go back to Omaha. So, maybe we can hit him up then, or maybe we can just get him on the podcast. He's so cool.
Yeah,
he's so
great.
Cool, Matt Peterson.
Yeah.
What's his fund? It's just Peterson Funds, right?
Peterson Capital Management, I think. Yeah.
Management. Yeah, okay.
Yeah, he was great. He was so nice. I mean, we did the we did a podcast with him, or Tom, it was really on Investing with Tom's podcast, but we did that. He invited us into his house in Austin to do that, which was nice, and he took us out for lunch and gave us a masterclass on options.
Yeah. He is so nice, right? So he's so outgoing and bubbly, such a nice guy, and he invites us in Omaha. He invites us to this barbecue. And yeah, for sure, we're Aussies. We're going to go to a barbecue. Well, we are. Tom's a Kiwi, but I'm sure he loves a good barbecue as well. So we go along to this barbecue, and then we're like, hey, we're going to be, his home base is in Austin, right, Texas. We're like, hey, we're going to be in Austin, Texas. And he's like, oh, we definitely have to meet up. We'll do a podcast. We'll go out to lunch. Oh, we totally have to hang out when you're at. So he's just one of those guys, which is just like he'll make the time for you. But that was really cool. So yeah, we went to Texas and we went out and had a good feed with him. Went to his home. I mean, this guy's managing millions, and he's just like, yeah, come to my place. I just live over here. Let's go. Recorded a podcast with him in his living room. Turned his living room upside down. And you remember getting that set up? Yeah. Like moving couches and moving this in and out.
It was chaos.
But he's such a nice guy. He turned to his bookshelf, packed full of all these investing books. He's like, yeah, look, whatever book you want to take, you pick it off the shelf and take it with you. I was like, wow, really? Pockets Poor Charlie's Almanac, and I think they cost like a couple of $100 that book, I think.
At least, yeah.
It gives us like personalized notepads and everything. It's like, here, take it. Yeah. Just a nice guy, just a really great guy. Yeah.
Everyone in Omaha that we networked with were so nice. It was kind of crazy. There wasn't really anyone I could remember that I thought, oh, you're a bit of an idiot or you're obnoxious. Like everyone was just super friendly. It was definitely a surreal experience for sure.
All right, should we move on from that one?
Yes.
Let me ask you. I'm looking at my waveform. My waveform is dominant this episode, Hamish. So okay, I got to shut up and I got to let you answer. Would you say it's better to start a business/side hustle and earn money, or start investing first and then start a business later?
Yeah, I don't think there's any really right or wrong answer per se. I think both probably work well for different people. Certainly for me personally, I mean, both were kind of intertwined because I was kind of building a business, talking about investing and in kind of investing a little bit at the same time. But even before YouTube and what we do now, I was certainly putting all of my money just into side hustles and businesses. I mean, I think that was, I remember I worked a lot as a kid, so I had maybe $5,000 or $6,000 saved up, and I put it all into this online business that just went to zero. And so a lot of what I did early on was just putting money into business building. And yeah, I lost a bunch of money doing that, but I learned a lot. And I ultimately, you kind of have to, lose a little bit to find what works ultimately. And I found what I was really passionate about and what worked really well. So for me, certainly it was putting money into the business, into businesses. So yeah, I think that's probably my answer. And then I guess overall, it's really back to where are you going to get the ROI, I think. So like today, I do both. Obviously, I invest and I put money back into my business. And I think about both, in a relatively similar way. If I have a certain amount of money that I could invest somewhere, it's okay, can I put this into my own business and get a better ROI than I can if I can put it into a stock? And it's just another kind of outlet. And if you have a business that's growing, then a lot of the time you're going to have avenues to put it to reinvest in your own business that will have a massive ROI over, say, a stock market investment. But the decision making is fairly similar for me, at least. How do you think about this?
Yeah, I'm the same as you, just thinking about ROI. Like, I knew that I didn't quite know what my ROI was going to be, but I figured like if I brought some people on as editors, we can put out more videos per week, high quality, probably average views would be higher, probably be able to put more than one out per week, and that might lead to roughly this amount. So I kind of thought about it like that, but definitely like it just comes down to where's your money best placed. I think that in a way, I tend to think people should slightly bias business, because that can, if you get it right, that can really like dunk, 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 and then that's your thing. That's yours. You can sell it if you want, make a whole lot if you want to sell a successful business, or just kind of be the owner and just reap the rewards. Yeah. For me personally, it got a little bit more enticing to reinvest back into what I was doing, which is kind of sad because on the channel, I kind of feel like a little bit of a hypocrite sometimes. Like I talk about stock market investing, and then my money that was coming in the door wasn't going towards the stock market anymore. It was going back into the business. So I was kind of like, yeah. But no, I definitely still do a lot of investing. And you're right. It's just like, obviously, like, when was it? Start of 2021, 2022. Was it? Wait a second. End of 2021, when everything was super expensive, right? I wasn't finding many opportunities in the stock market, but that's when I wanted to hire some people. So my money went that way as opposed to going into the stock market. But yeah, I definitely think you can do both.
To me,
I don't know.
To me, it's all the same. I mean, like, yeah, you talk about public stocks because that's what people are interested in, and we're interested in public stocks. But wherever you invest, it's still investing. Like, yes, you've got a bit more of a finger on the
still
pulse.
In a business.
It's still investing in a business, and so yeah, I don't feel like a fraud. I feel like it's just a decision that I have similar decisions as well. It's just where do you allocate capital best? Is it in a public company? Is it in a property? Is it in your own business? The decision making is, it's all kind of same principles.
Yeah. Yep, exactly right. Where should we go from here, Hamish?
Here's a quick one for you.
Sure.
Do you invest in gold or silver?
No, I don't.
Next question.
I don't have anything against people that do, but I don't pretend to really understand like what the demand for gold and silver is. But at the end of the day, like I guess I'd be more inclined to look at a silver or gold mining business. But at the end of the day, there's no moats. Commodities, there's no moats. They're all producing the same stuff. And it comes down to what the spot price is, what the market price is for these certain commodities. But no, in terms of actual physical like gold or silver, nah, I just don't. I just take the buffered approach. Like nothing against people that do. A lot of people do it very successfully. Just don't know what it's worth. It's just a bar of gold. I don't know what's one Bitcoin worth. I don't know. Just depends on what the next person's willing to buy it for, really.
Pretty much, yeah. I don't. Yeah, I'm the same. I'm not invested in any gold or silver, and I'm not invested in anything that's not a productive asset. Really, that's really the bottom line.
Yeah.
It's whether it's gold, silver, a cryptocurrency, your uncle's NFT, like whatever it is. If it doesn't produce cash flow, then predictable cash flow maybe is more important to specify. Then it's not something I can value. It's a completely different type of investing. Because you're not valuing it based on what you can get out of it. There's some other, whether it's scarcity or demand or some other measurement that I don't know how to do.
Yep. I kind of want to ask you this one.
Yeah, okay. What is this?
Can I ask you a silly one?
Yeah.
Should seniors still get a discount considering they seem to be the only ones with money?
That's a great point. We should cut the discounts, no more
Tax
pension, remove the disabled parking. No.
Remove the disabled parking.
Okay, that might be a bit far.
Hamish, Honor. Oh my gosh.
No,
well, you're getting cancelled, aren't you?
No, I don't really think so. I don't know. I don't think.
I still haven't moved on from we should just remove the disabled parking. Oh my god.
Yeah.
Sorry.
We shouldn't.
Silly
do that.
questions get silly answers, don't they?
Yes, they do. I don't know. I think most seniors probably aren't flush with cash. I think maybe a small portion have a lot of cash. But if you looked at kind of the median of retirement fund, I think it's relatively low for most people. So I don't know if that's actually true, but it's not something I have any stats on, and I don't have a political opinion on removing seniors discounts, unfortunately. So
I don't think I'd go removing seniors discounts because typically you need to fit some sort of eligibility criteria for the seniors discounts, or some sort of pension, and normally the people that get the pension are the people that need the pension. Okay, well let me change. Okay, let me change this question to something more interesting. What are your opinions on the idea of an estate tax? So when you pass away, instead of just being, because in Australia, I don't know how it is around the world, but in Australia, you can just give your assets down, like when they eventually get sold, you have to pay capital gains tax. But if you have $1 million in the bank, you can give that to your children or whoever you want.
Yeah,
it's not taxed.
I think the US.
What are your thoughts on
I'm pretty sure the US has an estate tax. I'm pretty sure. Maybe fact check me.
I'll look it up.
While I'm answering this question. Yeah, I don't think so. I mean, look, it's just kind of one tax of many taxes that are, people you could argue back and forth that you should have a tax on buybacks, you should have a tax on capital gains or negative, whatever it is. It's just one of many taxes, and generally speaking, I think you should be able to give money to people. If it's after-tax money, you've already paid tax on it once, you're going to pay capital gains on it or income tax on the dividends already. To add another tax there seems kind of silly. Like, I think it's kind of crazy that you can't just gift money to somebody. Like, I can't just give money to I mean, you can up to a certain amount, but then beyond that, it will get taxed. To me, that's kind of crazy, but I don't know.
When the estate is transferred, U.S. federal estate tax is imposed upon the taxable estate based on worldwide assets regardless of domicile of every U.S. citizen and U.S. resident. Upon their death that exceeds the relevance, there's a tax exemption threshold. So that it sounds like, I think that you should be able to, I think it's fair to be able to work hard to make your kids better off. I think it's fair. And if you work really hard and save your money for your children, you should be able to give them some money. I think what the problem is the big families that are giving their children billions of dollars. Yeah. I don't mind seeing some sort of a system that stops that. Like, oh my gosh, I don't know, JP Morgan's family are just going to be rich and rich and rich till the end of time. But I don't know. Arguments for and against, I guess.
Yeah, and it's easy to kind of look at, I think, big numbers and think, oh, this family has billions of dollars. They're kind of hoarding money. But at the end of the day, most families, if they have billions of dollars, it's almost 99% of it is invested in businesses. So it's capital that's deployed in the economy. It's maybe it's not deployed in businesses that you think are good for the economy or good for the environment or whatever it is. But it's not like the money is just hoarded away. It's been allocated, and it's only even a very rich family would only be drawing a small amount of that. I say small. I mean, it's probably still a lot, but they're drawing a small percentage of that money to live on. The rest is kind of deployed in the economy. So I think that's something to kind of keep in mind. That's definitely a hot topic.
Yeah, definitely. What one should I ask you next? You want to ask me one?
I'll ask you this one.
Okay.
Most millionaires make the majority of their money from owning their own business. Did we already answer this? Do you think people focus too much on investing in other businesses instead of putting money towards creating their own business? I think we kind of answered that.
We can't. Yeah. It's interesting. That's a different question, but we have already answered it. Pick another one, Hamish.
Let's do this one. Which sectors do you think will outperform in the next decade?
Oh, I don't know, Hamish.
Tell me.
Next. Nah. I mean, I think it's, I don't know, sectors. AI is going to get a lot bigger. Yeah.
Yeah.
And I don't even mean that just to be a funny kind of making fun of the buzzword, but I genuinely do think AI is going to go a long way in the next couple of decades. To make a speculative bet on AI just broadly, I'm not going to do that.
No.
I think one product that I think will see, this is just again, don't base any investment decision on what I say. One product I think that will see absolutely exponential growth is battery cells, rechargeable battery cells. I think that across the next couple of decades, we are going to need every single lithium-ion battery cell we can get our hands on for EVs and for grid-scale storage, because part of the renewable power system is we need to be able to store the energy for nighttime. So I think that that's probably one bet that I would feel most confident in personally for me, is betting on batteries for the future. I think that that's just going to... Because compared to like, the main reason I say that is compared to our current battery consumption. You say, oh, batteries are in everything, in every electronic device. Everyone's got like multiple electronic devices. We use so many batteries. We don't use batteries on the same scale that a home needs a battery, or that a grid needs a battery, or that a car needs a battery. Those batteries are a lot bigger and require a lot more batteries, like a lot more cylindrical cells in them. They require a lot more resources, a lot more materials. So, yeah, that's one area that I think is going to perform.
Yeah, and because
pretty well,
because those areas are all relatively new, we're only just kind of now seeing some businesses invest a lot in, research and development for some of these things. So, it will be interesting to see what new types of batteries or different. Yeah, I know nothing about the industry, but different ways that it can be done cheaper or more effectively. We haven't kind of seen much money go into that, whereas we do now, and we will continue to see that. Other sectors, I don't know. I don't really spend that much time thinking about which sectors will outperform, but yeah, it's hard to imagine.
Yeah, me neither.
it's hard. it's hard to imagine that AI isn't going to be so much more enormous than even we can imagine today. Just the last 6 months, it's kind of crazy how AI has been around for a long time, right? It's been around for a long time, but just the last 6 months, I think people are starting to see maybe some products they can mess around with their own hands, like ChatGPT. Like people can kind of see a little bit more of where the application is going. I mean, you can definitely see, okay, let's just pick a long year out so it's easy, but like 10 or 15 years out, you'll definitely be able to have an assistant, like a Google assistant, that is very, very good at picking up what context is and describe and just having a conversation with you, like back and forth. Like, oh, can you put this in the calendar? Actually, no. Can you move that like 2 days forward? Thanks. Like, you can't do that at the moment.
Or just like, hey, Google, I haven't looked at my calendar in a while. Can you figure out my schedule and book in an appropriate time to get a haircut?
Yeah, exactly. My life is a mess, Google. Can you make me a schedule?
Yeah, even that. It's like, hey, I've got all this stuff going on. Can you have a look through my emails at what things I've agreed to, and can you create a schedule for me? Thanks.
Yeah, and can you do all my work for me? Thanks.
Yeah, actually.
So I think it's hard to imagine, how much AI is going to become a massive part of our lives. But I'm super excited for it. Excited and a little bit worried, but I think everyone's always a little bit worried about the bleeding edge technology and what it means. I'm sure a lot of people were concerned that the internet, and even today, a lot of people are still very concerned that things like TikTok are not exactly great for us.
TikTok, what do you call it? Mind rot.
Your brain rot. One thing that makes me really sad actually with phones and technology is when you go to a concert and everyone just has their phones up. And it's just that makes me mad. That makes me really sad. Like, it's so bad. That's got to be one of the worst things terrible, ever, because it's just, you never watch those videos again. You just film them and you think you're going to watch them back. You're not. Just make one video. You don't have to video the entire concert. It's just, I don't know. That really bothers me.
And the thing is, the concert's being filmed professionally. And hey, if you don't have, you can watch the concert and you can just find one of these other million videos that someone else has taken, and you can just say, hey, look, you see this one? Yeah, that was like where I was.
Yeah. Crazy.
Pretty insane. Anyway, yeah. AI is going to be crazy, I reckon. It's definitely like Elon. I kind of subscribe to what Elon's saying about AI. Like, it's going to be used as a weapon. I definitely think. It could really, like, advanced AI. We need to start thinking. I think more people need to start realizing that artificial intelligence is going to be a lot smarter than all of us combined.
Yeah.
Like it's going to run rings around. We are biologically limited to this thing up here.
Yeah.
Yeah.
All I was going to say is we get frustrated with the tech. There's going to come a day when the tech is frustrated with us.
Frustrated with us, exactly right. Yeah. To AI, we're going to seem like ants.
Yeah.
Do you ever feel bad when you accidentally step on an ant? Most people probably not, But no, seriously, it's not that hard. Our whole life runs off of the internet. Everybody's lives really run off of the internet. Banking off the internet, stock markets, internet, everything, internet. You let AI into that and they've got that control. Like the best, okay, sure, we can design some sort of antivirus or some software solution to try and keep AI out. AI's smarter.
Yeah.
AI's smarter than whatever code you can do, bucko.
Smarter and faster.
I think I just want, honestly, this is kind of a bit grim. I can definitely, sorry, we're running a bit over time. Can definitely see the collapse of the internet and all of the systems we have today at the hands of AI. And it would be interesting to see what the hell we do if that happens.
Yeah.
What do we do?
Especially,
I don't know what we do.
Yeah, and especially if that happens a long time down the road when everyone alive is so used to the internet. I mean, even for myself, I can't do anything without the internet. If the internet's down, I don't know where I am. I don't know how to contact people. I don't know how to, I Google everything. I Google how to boil an egg and I'm like a monkey. I don't know how to do anything, and it's only going to get worse. So, which is not a bad thing if you have the internet because it's there, right? Just use it, right? And then I can free my brain up for other things that are more important. But there's a lot of things I don't know how to do or that I should. So it is kind of scary. What a nice way to end the podcast.
And with that said,
we didn't talk about anything bad in the economy this week, but we found a way to make it dark.
Let's talk to it. All right, let's finish off, Hamish. Do you have a fear of death? So let's get real morbid.
What's your biggest fear?
What do you think's going to kill you, Hamish? Oh gosh. Boy. No, before we get to that, let's wrap this thing up. Thanks guys very much for tuning in as always. Sorry it's a different episode today. Honestly, that's my bad. That was a bit of an oversight for me with this Grand Prix weekend. But hopefully we still gave you an entertaining episode anyway. And whatever happened, there's really not that much happened except maybe the Deutsche Bank stuff, but that's a bit boring. It's a bit of a non-story. So we'll see what happens in the next week and whatever breaking news, we'll cover it next week anyway. But with that said, thanks Hamish for joining me, and I might see you tomorrow night. We'll see how you go. Otherwise, I'll see you at the Grand Prix. Woo. And hopefully we'll see some of you guys there as well. If you're keen, if you see us, definitely say hello. But otherwise, we'll talk to you guys next week.
See you guys.